How to boost your credit score today with these simple tips. What's up guys, it's Mike here. Since my last credit score video, there have been some changes made to the algorithm that affects how your credit score is calculated, so I wanted to make a video to update you guys. I'll go into those changes and how they affect your credit score. We'll talk about common things that lower your credit score that you need to avoid. And then we'll talk about the newest Minecraft news. Just kidding. But I will reveal 5 easy tips you can do to instantly boost your credit score. Now it goes without saying, your credit score is easily one of the most important things when it comes to personal finance. This determines how and if you can build wealth. If you can get loans for things like buying real estate or cars, lines of credit, how much interest you pay or don't pay on the debt that you have. Your credit score will determine if you can use debt to become wealthy, or if you're going to end up like the millions of Americans who are caught in a hamster wheel of debt via high interest rates. The tips I share in this video are absolutely free and cost you nothing to implement. All I ask is that you hit the subscribe button, smash that like button, and click the notification bell for future videos from me. And to get your 2 free stocks from Webull, click the link below in the description. In the US today, there's a 3-digit number that helps us determine the amount of money you pay for credit. This can affect virtually every expense in your life, from the rates you pay for things like mortgages, loans, cars, homes, etc. The FICO score is used to determine how likely it is that you will pay off the debt when you are given a loan. The FICO score ranges from a low of 300 to a high of 850. The lower the score, the higher risk you pose to the lender. Your score is calculated by applying FICO's formula, which is based on data from your credit report that looks at how well you have managed your debt. It takes into account your payment history, total debt duration, meaning length of your credit history, new credit, and types of credit. If you want a high credit score, you will want a strong mix of credit cards, lines of credit, mortgages, and auto loans. But opening up too many accounts in a short period of time can make you high risk to lenders. Believe it or not, most people actually have multiple FICO scores. Each is based on data collected from the 3 credit bureaus, Experian, Equifax, and TransUnion. FICO sells this data to the big 3 credit bureaus. Each of these companies then crunch that data to produce the numbers that you see that come with your credit report. One thing to keep in mind here, guys, your credit score does not include items such as your income, savings, utility bills, your job, or any spending activity you use on a debit card. Simply put, guys, if you do not have any credit history, you will most likely not have a credit score, or if you do, it will not be a good one. Your credit score does change in real time, so it can move up and down based on your credit usage habits. According to FICO, the average American credit score is over 700 for the first time ever. This means it's never too late to turn your credit score around. So there's some new changes to FICO. As new financial products emerge, lenders need a way to determine who to lend to and what risk factors they present. FICO has responded with new algorithms for their changing times. If you don't know, an algorithm is simply a set of rules used to solve problems using mathematical calculations. Credit scoring algorithms are not new, but I'll give you 3 reasons why credit scoring algorithms are worth taking a closer look at today. Number 1, the range of characteristics and behaviors that financial service providers can use in their algorithms is growing, thanks to increased availability of consumer data. Number 2, credit scoring models are becoming more complex and automated. There is less human oversight of the roles that various characteristics are playing in an applicant's final score. Number 3, algorithms are becoming more common in emerging markets, where there is often less regulation and oversight of what data is used and how it's used. For example, in 2020, there was new standards for public records issued, which stripped all civil judgments and tax liens from credit reports. This played a significant role in driving the average credit score up higher. Adding to this mix, there was a new credit scoring system released called Ultrafico. Under this new system, prospective borrowers' cash handling habits are very closely watched. This could result in some higher scores for some folks and lower scores for other folks based on your cash handling usage. For example, if you only deposit your checks from work into the bank and you hoard cash to stay under the radar, this could ultimately hurt your credit score. So what are some of the things that you may be doing right now that are hurting your credit score? Maybe you don't have enough credit. If you're a new borrower or haven't had any time to open up new cards, then you'll have a low score because you haven't established credit history. Late payments. Say you have a late payment on your credit report that you didn't know about. You have to resolve and fix this, otherwise that could stay on your report for up to 7 years. Late accounts. See if you have any accounts that are outstanding over 180 days or longer. This can really hurt your score. You must pull your credit report at least once a year to look for these types of things. Typically, when an account hits 180 days delinquency, the lender will sell your account to a collection agency, which will then work to try to make that collection from you. Check for high balances or maxed out credit lines. You only want to use up to 30% of your credit line at any one time. This is called credit utilization, and this metric can really hurt your credit score if not done correctly. Do not borrow and charge the max on any of your credit cards or lines of credit. Lenders see you as extreme high risk when you do this. Check to see if there's any foreclosures on your credit report. From time to time, these are left on accidentally, even though you cleared them off. Or there are inaccuracies reported on your credit report that you didn't know about. For example, someone with a similar name, they could have put their bad debt or charge onto your account. 1 out of 3 Americans has inaccuracies reported on their credit report. Who knows? You may be one of them. So guys, here is 5 tips to instantly boost your credit score. If you're young and don't have credit history, the fastest way to establish credit history is to be added to somebody's account as what's called an authorized user. You can piggyback off of their established credit history and rapidly build your own. Number 2, pay off your balances so your credit utilization is only around 10%. I know I said 30% just a minute ago, but to really make an increase in your credit score, you want to keep your utilization around 10%. This will make the biggest difference in the least amount of time to raising your credit score. Number 3, try Experian Boost. This is a free service that links all of your accounts and tracks on-time phone and utility payments by adding them as a positive trade to your Experian credit file. Taking advantage of this will give you more positive credit history and more on-time payments, which will help boost your score. Number 4, negotiate any late payments. In life, you don't get what you deserve, you get what you negotiate for. So if you have a late payment on an account, call the creditor up and negotiate with them a way to pay it off. Negotiate for better terms or a one-time forgiveness where they'll forgive your debt and revert your account back to its status before the late payment hit your account. Believe it or not, this does work and become a lifeline for you if you happen to miss a payment from time to time. If you're struggling and you can't make the payments and you know it, do not let it go late. Instead, call your creditor and work out some type of a installment plan in exchange for paying the debt off. Number 5, keep all your accounts open. Do not ever close a line of credit. Part of the way the credit bureaus calculate your score is by credit history. If you close any of these accounts, this will shorten your credit history and thus hurt your score. Even if you don't use the card or the bank anymore, keep it open, don't close it. By doing these tips, eventually you will raise your score above 750. You will get the lowest interest rates possible. You'll get credit card sign-up offers, lots of free stuff, and it opens up so many opportunities that will save you money that you would just not get if you have a low credit score. So thanks for watching my video, guys, and I hope you use these tips and I hope your score goes through the roof. If you got value out of this video, please consider hitting that subscribe button, pounding that like button, and clicking that notification bell as I'm gonna be posting here weekly. Thanks a lot, and I'll see you in the next video.